Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be going through a dollar cost average or DCA simulation tool. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. You should be aware that there are several tiers available with ITC, including a free one, okay? Including a free one. You just have to provide your email address. And the tool, the DCA tool that we're going to go through in this video is available on the free tier. The reason is because I think that this tool will be, so educational, right? That I think it's worthwhile that everyone get access to it, okay? So we're going to go through systematically a DCA simulation. Sometimes we're going to just look at Bitcoin. We're going to also look at some other cryptocurrencies as well, and just be honest about how various DCA strategies or lump sum strategies would have worked out. Some of the time, you might not like what I have to say about certain strategies. But again, don't take it up with me, take it up with the data. I'm just showing you how this stuff works out over the long term, okay? So, the place that I want to start is a weekly DCA of Bitcoin of $100 had you started doing that at the peak, okay? So, if you had the worst luck in the world and you joined crypto on the day of the peak and put in $100 and said, you know what, Bitcoin's going to change the world, just going to put in $100 every single week from November 10th, 2021, indefinitely. Had you done that, how would you have fared? Interestingly, had you done that, it would have included 90 installments of $100 each, totaling $9,000. So that would have been 90 weeks ago, which was the peak. What's fascinating is despite the fact that you might have started DCAing at the peak, you would be up 11.41% on your money through a DCA strategy, even starting at the peak, if you had just kept at it every single week, okay? And you would have 0.3425 Bitcoin in your portfolio. Now, what if you had just done a lump sum strategy? That would of course be this orange line down here. So the DCA strategy is this purple line, and it does show you that for a long time you would have been down on your money, right? Like you would have been losing money. Your invested amount would have been more than the current valuation of your portfolio at that time. But at some point you can see that it crossed, and therefore at that point the portfolio valuation was actually higher than the amount you actually put in, okay? It's kind of interesting way to look at it. But had you lump summed, it would have been the orange line, and you would have been down almost immediately. And despite the fact that it started, turning back up here in 2023, your portfolio, by lump summing at the peak, would only be worth $4,000. And these percentages here show you with respect to a DCA strategy for Bitcoin. It does not show you, where you'd be with respect to the US dollar. It shows you with respect to a DCA strategy for Bitcoin, how do you fare compared to that? Now, this is a work in progress, okay? So please don't be too critical of it. We're gonna try to work some things out, but this is at least the initial version. We're gonna be making some improvements to it as well. So check it out, and you can see that a lump sum strategy at the peak would be inferior to a DCA strategy since then, to the tune of negative 60%, right? So a DCA strategy would prove itself to be much better. Now, there's this other idea that people keep saying about the altcoin market. Now, I have been adamant for a year and a half now, ever since 2022 kicked off, that the dominance of Bitcoin would be going up quite a lot. And sometimes it can be hard to understand how important that is if you're not looking at just how hard the altcoin market is getting hit. So why don't we go through a DCA strategy for altcoins compared to Bitcoin over that same time period? So let's start with ETH. I don't even consider ETH an alt, but we're going to start with ETH. Had you DCA'd ETH instead of Bitcoin, your portfolio would still be up. I mean, again, this negative number you see right here, the negative 7.89%, that's with respect to the DCA Bitcoin strategy. Okay, we're gonna work out some of the kinks here to make sure that it's a little bit more intuitive. But you'd be up about $235, negative 8% against the DCA Bitcoin strategy, right? And so it shows you that Bitcoin has been the better play. Now, it hasn't always felt like that. You know, I know a lot of people have said that ETH has outperformed, but it would have been the better play to have Bitcoin, right? To DCA Bitcoin over that time period. Where it gets really interesting is when you start showing the altcoin market, okay? And I'm just going to randomly pick a few, not trying to cherry pick any specific narrative, okay? I will say going into this that if you look hard enough over various time phases throughout the bear market or the pre-halving year, you are bound to find some that outperformed Bitcoin. There are exceptions to the rule. And if you find one, you should not consider that a gotcha moment, right? That's just part of the cryptoverse. There's always some that outperform Bitcoin. But Bitcoin outperforms the vast majority of altcoins. And it's so hard to know going in which alts will underperform or which ones will outperform Bitcoin. Most of them will underperform over a long enough time period. Some of them will outperform over certain time periods. So let's go through. I'm just going to pick some random ones, okay? There's Cardano, we got Solana, there's Polkadot. We could, I'll pick a few others. Avalanche, Chainlink. I know that's one that I know people are interested in. We can maybe pick some lower market cap cryptocurrencies as well. VeChain. What are some other ones that would be, I'm trying to think what other ones? Aave. Let's just start there and see how this would have performed. What do you notice? The first thing you notice, the only two that are above this green line, so the green line, again, is just the DCA $100 a week, okay? That's what you're putting into the market. The only two portfolios that are in the money are Bitcoin and ETH. Every other coin, had you DCA'd it starting at Bitcoin's peak, you would be down. With respect to Bitcoin's DCA strategy, AVAX would be down 45%. Polkadot would be down 40%. Cardano would be down 39%. VeChain down 38%. Aave down 27%. Solana down 27%. And Chainlink down 18%. And ETH down 8% against the DCA Bitcoin strategy. Now, at any given point during 2022 or 2023, you could point to a period where that altcoin maybe was outperforming, right? You could. I mean, again, think about how many times people have called for alt season over the last year and a half. And think about how many times they were right, okay? You don't have to count very high. Look at the chart. It shows you just how much the altcoin market gets wrecked against Bitcoin. Your Bitcoin portfolio is up, even though you might have started DCAing it at the peak. But if you kept at it, it would have worked out. And that's why understanding where the Bitcoin dominance is going to go is so important. If and when we get to the point where we think the Bitcoin dominance is topped out, I'm not there. Okay, I think the dominance is still going to go higher. But if and when you get to that point, if you think that the dominance is topped out, that is where the altcoin market can give you oversized gains. But the difficult part is for people to wait sufficiently long enough to start getting into the altcoin market, because they get into alts and they just keep seeing them go lower and lower and lower and lower, where they would have just been better off sticking to Bitcoin. Now, Bitcoin is up right now. Like, this strategy would be up right now. 3 months from now, even the Bitcoin strategy could theoretically be underwater for all we know. I would expect at some point before the halving, we could have a secondary scare in the market. That typically happens, so don't be surprised if that happens. And even a Bitcoin portfolio could go underwater again. But if this chart teaches you anything, it's that even if you started DCAing it at the peak, as long as you kept at it and didn't give up, you would eventually been in the money, right? And that's what the context of history shows us with Bitcoin, is that if you just kept at it you would eventually been okay. It's just a lot of people, they only DCA at the peak, and then they capitulate at the bottom, okay? So remember, a DCA strategy tends to work out over the long haul. That's true, okay? Now, rather than take the peak, why don't we take another example, right? Let's say you started doing it in January 1st of 2022. Does it make a difference? No, it does not. Every single altcoin DCA strategy, even starting from January 1st of 2022, would be underwater. It's interesting, right? I mean, it's interesting. It shows you that they would all, the ones that at least we have pulled out, right, would all be underwater compared not only to the USD valuation of the money invested, because again, you can see the 8,300 would have been invested over that time period. And if you look at this table here, the only two that are above the investment amount are Bitcoin and ETH. Now, let's go a little bit further out and see if it makes a difference, because at some point it probably will make a difference, right? Let's look at April 1st of 2022. Does it make a difference? Bitcoin, still in the lead. ETH is number 2. Link is the only altcoin out of those selected that is above the invested amount. All the other altcoins on here are below the invested amount, because again, they're below $7,000, which is the total investment. We could go further out, right? Why not? Why don't we go out to August 1st of 2022? Here, Bitcoin is in the lead. And guess what else is in the lead over ETH? A lump sum into Bitcoin. So in this case, had you DCA'd starting August 1st, not only was a DCA Bitcoin strategy better than all the altcoins we have on here, but also a lump sum Bitcoin strategy was better than a DCA ETH strategy, because ETH has been bleeding against Bitcoin. People keep telling me the chart is bullish, but it's just lower highs and lower lows, right? It's just lower highs and lower lows ever since the merge. And this shows you that, yes, you would be in the money because your ETH portfolio would be worth $62.88 and you would only invest in $5,300, but your Bitcoin portfolio would be worth about almost $7,000. Again, the ETH DCA strategy would have been inferior to the Bitcoin DCA strategy to the tune of 9.19%. This is a really important way to look at the market. Let's carry on. Let's go to starting January 1st of 2023. Why don't we look at that and see what's what and who's who? Okay? January 1st, 2023. Now, what's going on in this situation? In this situation, the one that's in the lead is lump sum Bitcoin. The one that's second in this case is Solana. Why is Solana in the lead in this case? Because you're basically cherry picking the low, right? So if you would YOLO'd into that alt right at the bottom, then it would have outperformed, or if you had just started DCAing it there at the bottom, it would have outperformed Bitcoin since 2023 started. But even in that case, a lump sum strategy would have been a lot better just into Bitcoin. Okay? A lump sum strategy would have been better. You would have invested $3,100, okay? But in this case, a lump sum Bitcoin would be worth now $54.62. And the Solana DCA strategy would only be outperforming the Bitcoin DCA strategy since that date by about 3.77%. Every other alt you see on there would still be down. Now, the reason that Solana sticks out there is because it got hit so hard in the FTX collapse, right? It was like down well more than 90% or so. So it shows you that, if you cherry pick the low, yes, it can work out. But if you admit to yourself, hey, we don't know exactly where the low is going to be for any individual coin, Bitcoin tends to stand the test of time. This shows you just how superior this can be. Now, does this hold true throughout all of history? No, it does not. Okay? Let me show an example. Let's go look at the same stuff. And I'm going to get rid of all these altcoins because I want to start clean here, because not all these altcoins existed back as far as we're going to go. Let's suppose you started a strategy in, I'm trying to think about how far back we want to go. We could go back to 2019, let's start 2020. Let's start 2020. Let's suppose you started January 1st of 2020. Okay? And you DCA'd Bitcoin. What would happen in this case? In this case, a lump sum strategy would have been far superior. Why is that? Because in this case, and by the way, this would be further along in the cycle than where we currently are. Because again, we're talking about January 1st of 2020. If you believe in the 4-year cycle narrative, right, that would correspond to maybe January 1st of 2024 or plus or minus a month or two. Because the halving is not exactly every 4 years. In this case, a lump sum Bitcoin strategy, so if you would have invested $18,700 over the last 187 weeks, that would currently be worth $28,448. A lump sum strategy back then would now be worth $74,489. It's quite a useful way to look at the market. Now, in this case, had you waited and you didn't buy ETH in the 2018 bear market and you ignored it in the 2019 pre-halving year, where it also got wrecked against Bitcoin for basically the entire year, and you just started DCAing ETH in January of the halving year, how would that have performed against Bitcoin? In this case, you can see that a lump sum, and again, we're not comparing lump sum ETH here. Again, there's a lot of kinks to work out in this. And you can also, there's a lump sum tab you can look at, but we're just going through the basics here. A lump sum Bitcoin strategy would have still been better than a DCA ETH strategy, but it shows you that a DCA ETH strategy starting January of the halving year would have outperformed a DCA Bitcoin strategy by 82.81%. Throw on Cardano. Cardano would have outperformed a DCA Bitcoin strategy by 14.64%. The hard part, though, is to wait. It's so hard to wait, right? People want to front run it, and they keep buying altcoins all the way down, and then eventually the last person who's going to capitulate finally converts all their alts to Bitcoin, and then that can potentially mark those lows for those alt Bitcoin pairs. The altcoin market excels during excess liquidity conditions. That's where it excels. We're not in that regime right now, right? We're not in that period. When liquidity has been taken away, Bitcoin outperforms the altcoin market. When Bitcoin goes down, the altcoin market goes down more. When Bitcoin goes up, the altcoin market lags behind. So people call me a Bitcoin maxi all the time, and I don't really know what to say. Sometimes I want to say, well, thanks. I mean, the other strategies over the last year and a half would have been inferior. But there's another part of me that wants to say, you know what? For me, it's just about what the data says. You can leave the narrative at the door. I don't really care about that. You can call me what you want to call me. But when it comes to the data, it has and continues to suggest that Bitcoin dominance goes up in the bear market year and in the pre-halving year. And for those who are just simply able to take a cold shower anytime they wanted to buy an altcoin over the last 18 months and instead focused their crypto portfolio on Bitcoin instead, they would have significantly outperformed most altcoins. That will not be true forever, okay? There will come a time, and I think that inflection point could be coming in the next 3 to 8 months. Let's just say 3 to 8 months, where you can find altcoins, a DCA altcoin strategy could start outperforming a DCA Bitcoin strategy. But the only reason it would occur is because the altcoin market is so far down that if we even get the slightest sense of liquidity returning back to the market, those altcoins can start moving again. Over the long haul, Bitcoin will still likely outperform most altcoins. If you think about it over multiple cycles, like if you were to say what is going to outperform, Bitcoin or a new altcoin that is taking advantage of the most recent narrative. For that cycle, it could very well be that altcoin. But if you were to say what's going to perform better over the next 3 cycles, I would say, well, maybe that altcoin would perform better over the first cycle, and maybe it would start to flatten out against Bitcoin in the second cycle. By the third cycle, just sticking with Bitcoin would have probably outperformed, right? So that's something you have to consider as well. Maybe we can find an example of that. Let's go back even further. So let's go back to 2013. 2013. And we're going to compare Bitcoin, because we got to find coins that actually exist back then. Let's look at Litecoin. And it pulls up the starting date here of April 27th, 2013. Let me switch this to a log scale. Now, in this case, lump sum Bitcoin would obviously have been the best. Why is that? Well, if you're talking about $100 a week since 2013, that's $53,600 over 536 installments, right? Clearly, it would have been better to just YOLO in that case to lump sum 53K back when Bitcoin was, only trading for hundreds of dollars. Okay, so there's clearly a difference, but when you go far enough back, that lump sum can often outperform a DCA strategy over that same time period. But what's interesting is when you first start off, you can see that Bitcoin and Litecoin are more or less the same in terms of what they give you back, right? There's not a huge difference there. And at this point, Litecoin was in the lead, right? At this point, you would have invested $4,200. Your Litecoin portfolio would have been worth $19K. Your Bitcoin portfolio would have been only worth $17K. But as you go further, the Bitcoin portfolio takes over, and then it's $18,000 for your Bitcoin portfolio and only $10K for your Litecoin portfolio, and you would only invested $6,300. So your Bitcoin portfolio would have been up like 3x, and your Litecoin portfolio would have only been up less than 2x. But in the next cycle, you can see that they sort of flip-flop around. Okay, so let's get our bearings here. Bitcoin is the purple line, okay? The orange line is not, so the upper orange line up here is the lump sum Bitcoin. The lower orange line is the Litecoin DCA strategy. So you can see that for a while, Litecoin was keeping up in the first and second cycle, but what happened by cycle 3? Bitcoin, it widened the gap, okay? And so now a DCA strategy in Bitcoin, hold on to your hat, right? But a $100 DCA strategy a week since 2013 would now be worth $2.1 million. Litecoin, your portfolio, would be worth $595,000. Now, you would have only invested, and I say only, right? But you would have invested $53,600 during those 10 years. So you would have invested just over 50K over that 10-year time frame. Your Litecoin portfolio would be up, I guess here going to the last date, about 600K. So your Litecoin portfolio would be worth around 600K. So you're up more than 10x, right? But your Bitcoin portfolio would be up 3 times more than your Litecoin portfolio. Now, being up 10x is great, but being up 30x is better, right? What's better, 10x or 30x? I mean, 10x, you're not going to cry yourself to sleep if you're up 10x, but had you just stuck with the safer asset, right, Bitcoin, you would have been up a lot more. So that is the example when we talk about altcoins, how for a cycle or two, the altcoin might keep pace with Bitcoin, right? Like one cycle, maybe it outperforms. The second cycle, it kind of levels off against it. By the third cycle, Bitcoin's normally outperforming. Bitcoin is number one for a reason, okay? It's number one for a reason. It's not a fluke, and it's probably not going to change anytime soon. So go through this strategy for different altcoins and just see how some of them outperform for a time, but then eventually they tend to fade against Bitcoin. If you can find an altcoin that either outperforms or keeps pace with Bitcoin for a couple of cycles, then hey, you're making progress there, right? But this is an important thing for you to consider. Most altcoins, while they might outperform Bitcoin for a cycle or two, they tend to not outperform for much longer than that. That doesn't mean, that it's not worthwhile to potentially, take a position, right? I'm not trying to provide any financial advice or anything. I'm just saying that if you're going to sit there and come up with a DCA strategy and then just tune out for 10 years, Bitcoin has been the better play when you compare it to most altcoins. If you look at any individual cycle, sure, you can find altcoins that outperform. But we need to understand the strategies and how the DCA strategy compares to the lump sum strategy, and how the DCA Bitcoin strategy compares to the DCA ETH strategy versus the DCA altcoin strategy. The DCA altcoin strategy can work out for altcoins that don't fade into the depths of the cryptoverse, because there are many altcoins that you could look at back in 2020 that if you had started DCAing them even in the halving year, Bitcoin would have still outperformed them, because that altcoin became a relic of the cycle before it, and it never recovered because there were new shiny altcoins in the next cycle that people cared about. So there's an element of survivorship bias. We only look at the coins that are still around because those are the ones that people are interested in. But if you were to go back and look at the top 100 back in 2020, I guarantee you, you'll likely find several altcoins that underperformed Bitcoin since then, even though it was going into a lot of excess liquidity environment, because people just didn't care about them anymore. There was something else to care about. So hopefully this tool can be valuable to you. Remember, you can access this tool via the free plan. You don't need a paid subscription to access this tool. Now, we're probably going to add some new features to the tool that are related to the risk metrics and whatnot, which you can't access on the free plan. But if all you want to do is look at various strategies compared to and look at various cryptocurrencies here and see how they compare, you have the ability to do that. And the other cool thing is that you can actually copy the link when you get this, and you can share it with people and say, hey, look how this one would work out. And they can click on it. And as long as they're on the free plan, they can go look at it as well. Hopefully you guys enjoy this. And if you scroll down, it'll actually show you. So let me show you one more thing. So let's just go look here at a Bitcoin strategy. Let's say starting April 27, 2022, whatever. It'll show you, the date, the price at the time, how much you would have accumulated, how much you would have invested, so it keeps track of how much you would have invested, and also the portfolio valuation at that time. And you can see that for a while, right, you're underwater for a while, but then at some point, it changes, right? At some point it changes. And it looks like that point is right around here, where the portfolio valuation is now worth more than how much you've invested. So make sure you check this out, intothecryptoverse.com, and play around with it, see what you think. Find some altcoins that outperform Bitcoin. There's going to be some, but you'll see time and time again that most of them underperform over a long enough time horizon. Thank you guys for tuning in. Make sure you subscribe if you're not subscribed. Give the video a thumbs up, and I'll see you guys next time. Bye.